we're getting started. Wale Olusi is a research analyst, is joining us via Skype from downtown Lagos. Wale, thank you very much for coming through. We appreciate it.
Afternoon.
I'm sure you've had some little time early today to go through this report from Executive Partners. Do you agree with some of the permutations there, or the conclusions, as it were?
Yeah, I think the particular one that really struck me was the issue about loan growth. Yes, I think when you convert to dollar, there's a likelihood that the growth rate might tickle up. But I think things might not be as I think it's a bit optimistic. Even looking at their projection of something around 10 to 20%. I'm not sure of the number anymore now. From our side, we think overall performance of the banking sector is largely going to be dependent on asset quality and the outlook on the payment charges. For Q2, we are not as bullish. Most of the banks are largely saying that outlook for loan growth is modest, and in payment charges is going to NPLs are going to continue to rise, largely driven by the fact that apart from loans to oil and gas sector, the commerce and industry loans are also supposed to weaken because of the issue surrounding the FX market and the overall fundamentals of the economy. So yeah, NPLs are largely going to continue to rise, and that will continue to pressure profitability. So we are not as bullish, but we think overall for full year, the impact of the recent move on FX is positive, but the issue there remains the fact that the marketers are not still very confident. I mean, they still have concerns around the fact that investors haven't started coming in. They are still testing how successful the system will be, and some of them, they are not. The confidence is not yet there for the foreign investors to come in. We spoke with a couple of them last week, and I mean, they applauded the move by the CBN, but the market is not still liquid. CBN remains the largest supplier of FX. Autonomous participants are not yet in. So if you cascade this forward to about 3 months from now, maybe it might not be as rosy. Apart from the fact that if you redenominate the dollar after a 40% devaluation, and look up for performance, but I think net income is going to continue to be depressed. Trading income will remain very soft, and the only strong thing coming from the gross earning side is going to be fee and commission income. So we think for the banks overall this year, they are not as attractive as they should be, but it's not all bad. They are still very profitable. Their CR are still very strong. So we think in the short term, it might not be as rosy, but on a longer view, yes, things might get back to normal because banks are very resilient.
We're starting a brand new trading week in July, and the numbers will start coming in. What are expectations from Tier 1 and Tier 2 banks? Who do you think would be able to are coming with some numbers? Some folks say, look, those who pay interim dividend will be part of the trading actions starting from today.
Yeah, for the Tier 1 banks, we think that Access, for one, BT Bank, and say UB, we are very bullish on those. Their full year and Q1 numbers were fantastic. I mean, despite the very challenging operating environment, these banks were able to weather the storm, and you can tell from their number. For the like of FBN and ETI, we are not as bullish on them, so we do not expect it. So interim dividend might come from the like of Access, from GT, who has shown this. In Tier 2, we are very bullish on Sterling. That's our topic in that space. The likes of Diamond and Sky will continue to, they still have capital issue and issue with NPLs to deal with. So we're not as bullish on these guys, given the overall, outlook on their performance in full year and in Q1 2016.
Okay, Wale Olusi, thank you very much. We'll keep an eye on those numbers. Again, enjoy your holiday, which will be tomorrow and Wednesday. Maybe we'll get together sometime before the end of the week. Thank you so much for coming through. Research analyst at Afrinvest, Wale Olusi.